Welcome everyone to Vested Interest. This is Shane back again for the Stock Pick of the Day video. It is October 12th, Thursday. This will be the last video of the Stock Pick of the Day series for the week. We are going to take a look at Darden. This is another one out of the consumer discretionary sector. I think I mistakenly called Texas Roadhouse yesterday out of the consumer staple sector, but this is out of the consumer discretionary. Same thing with Texas Roadhouse as yesterday. This is a chain, a lot of different chains under one umbrella of restaurants. So let's jump right in and take a look. So if you want to know more about this company, check them out at www.darden.com. That's www.darden.com. Another one I've never taken a look at, but since we looked at Texas Roadhouse yesterday, I figured we'd look at some of the other companies in this particular space. So Darden was one that I looked up. You can see their brands the restaurants include Olive Garden, Longhorn Steakhouse, Yard House, Ruth Chris, so several steakhouses, Bahama Breeze, Eddie V's, Seasons 52, the Capitol Grill, I believe that's a steakhouse as well, Cheddar, so a lot of steakhouses. And Darden's roots can be traced to 1938 when our founder, 19-year-old Bill Darden, opened his first restaurant called the Green Frog. Here you can see a picture of Bill Darden and the Green Frog restaurant, the first one he opened there. The 25-seat luncheonette in Waycross, Georgia promised service with a hop. He understood that excellent service would be vital to the success of his restaurant. He treated everyone equally, and he welcomed all guests to his tables. The casual dining pioneer's commitment to superior service rings true today, more than 80 years later. In each of our restaurants across North America, his strong values form the bedrock of Darden's culture. Serving others is at the heart of our business, and we never forget it. So a lot of different restaurants underneath this umbrella. So if one is having issues, hopefully the rest of them will pick it up. And you have some on the higher ends like Ruth's Chris, Italian, like steakhouses. Like I said, this one is more, Bahama Breeze would be on the lower end, kind of a walk-in hamburger and fries type of place, right? Eddie V's, I believe, Prime Seafood, right? So they've got their hands in several different types of food to offer as well. So again, if you want to know more about them, www.darden.com. That is their homepage. Let's continue here. Now, the reason we are looking at them today, down 2.38%, we are talking about Darden Restaurants Inc., ticker DRI, out of the consumer discretionary sector, closed out the day at $134.25. 52-week range as low as $126.69, as high as $173.06. So closer to that 52-week low, though they could drop a little bit further back to that 52-week low. Average volume 1.1 billion. Today's was 1.10, 1.14 typically. And you can see that sell-off pretty much throughout the day. Looks like leveled off a little bit around noon. Excuse me, I have a bit of a head cold, so apologies for that. Market cap of 16.152 billion, a beta of 1.26, so they are more volatile than the overall market. And again, you can see that volatility here throughout the day. Price to earnings ratio is pretty decent at $16.70 per share. EPS, very nice EPS, $8.04 per share. Next earnings date coming out December 14th through the 18th, sometime in there. Forward dividend is $5.04 annually. They are a quarterly payer. We'll see that here in a little bit. Very nice dividend yield on this one, 3.66%. High yielder here. Ex-dividend date, October 9th. So we just passed that. Looks like they're going to pay out November 1st. And a one-year target, at least according to Yahoo Finance. Not affiliated with Yahoo Finance, just one of the sources I like to go to for information. They have a one-year target estimate of $170.58 per share. Now we're going to get into the statistics. We're going to look at dividend yield theory to see if this one is potentially undervalued. To do that, we go down to dividends and splits. We look at their 5-year dividend yield average at 2.7%. We compare it to their current 3.66 or forward annual 3.66, same number. And since it is higher, and it is much higher, this one actually presents a very nice margin of safety just going by dividend yield theory. This is potentially showing some undervaluation here. Now, their payout ratio is a little higher than what we saw with the Texas Roadhouse at 61.44%. We're going to see it's in the 60s. I believe the next one we're going to look at is around 65%. We'll see that here in a minute. And we also want to get into the financials. Now, if you're interested in a company, we're going to look at free cash flow. But if you are interested, you want to do more of a deep dive on their financials, make sure you understand how their revenue is growing, how their debt is growing, if it's being paid down, what their assets to liabilities are, what their forecasted revenue growths are going to be. All good information under financials. You're going to find their balance sheet, their income statement. And like I said, we want to look at free cash flow because we want growing dividends over time. And to have growing dividends, you need growing free cash flow because that's what dividends are paid out of. So going back to 2020, you've got 217 million here. 2021, big jump up to 924 million. 2022, bit of a drop here, 857 million. And I'm assuming that some of this, because it looks like they're right around 8s to 9s, I'm assuming some of this decrease here is 2020 is the COVID stuff that we went through, just like Texas Roadhouse. All restaurants were hit during that time. So not concerned with a much lower number here compared to other years. 2020, 857 million. 2023, where we're at now, looks like they're currently at 951 million. So good numbers, nice free cash flow growth over time. And you can see here clearly they are buying back a buttload of shares. And even though it looks like from 2021 to 2022, there was a bit of a drop, that is more than accounted for in the repurchase of these shares here. So nice to see them repurchasing their own shares. That means you as a shareholder, if you own this company, as they repurchase more shares, even if you're not continuing to buy, you become more of a shareholder. Your percentage of ownership goes up every time. So let's keep going. Now, I like a stockanalysis.com as another source that I like to go to. Make sure you're picking at least 2 sources so you can back check the information you are getting is accurate. And they have 19 stock analysts that have taken a look at this. They call it a consensus buy. They have a low estimate of $152, which it currently sits quite a bit lower than their lowest estimate. So that would be a 13.22% increase from where it currently sits. They have an average estimate of $168.47. That would be a 25.49% increase. And they have a high estimate of $190. And that would be a 41.53% increase from where it currently sits. All the while, you could collect that 3.66% dividend yield. And if you were to wait and see if they pull back further, obviously you could get that dividend yield a little higher. Though I believe 3.66% is very respectable dividend yield. Now we're going to look at statistics. I like to look at return on equity and return on invested capital. I like 10% or better for both. And you can see here return on equity is 46.7%. Very nice. Return on invested capital, 11%. This is actually a little bit lower than what we saw from Texas Roadhouse, but that's all right. It's still above the 10% I look for. Excuse me. And I also like to look at earnings per share growth, EPS growth here. Forecast 5 years, they have 8.85%. I like 5% or better, so this does beat that metric. And you can see here they estimate their 5-year revenue forecast at 4.74%. So they see their revenue growing over the next 5 years as well. Very good numbers overall on this one. I do like that they have several restaurant brands in their portfolio as well with different options like seafood, steaks. That so gives you, like I said, a little bit of variety there. If one particular chain is doing poorly, hopefully the other ones pick it up. And I like that they are kind of in different price points. Ruth's Chris, kind of higher price point. Bahama Breeze on the lower end. And Olive Garden kind of in the middle there, which is an Italian place. So I like Olive Garden actually as well. Now we're going to look at the dividend. Like I said, payout ratio here, 65%. We saw around 61% from Yahoo Finance. So I'm just going to call it in the 60s. It's under the 75% I look for. Very nice dividend growth on this one as well, 9.09%. Not growing as fast as what we saw with Texas Roadhouse yesterday, but they do have a higher starting dividend yield, so I am okay with that. Now, you're going to see they similarly, not really paused or stopped their dividend, but they cut out a couple of payments here. We'll see that. Well, let's just look. October 8th, 2020, they were at 30 cents. And I did go back. They've been paying dividends since 2014. Actually, I didn't clip it far enough back. They were actually paying 88 cents in 2019. They did cut their dividend in 2020 down to this 30 cents. Then in 2021, they started raising it again, 37 cents. And then January 7th, they raised it up to 37 cents. April 8th, 2021, they raised it back up to 88 cents. So there in 2020, they did drop it down to 30 cents from 88 cents. But then by the end of 2021 or mid-2021, they were back to where they were. And by the end of 2021, July 8th, 2021, they were up to $1.10. 2022, July 7th, $1.21, and most recent raise up July 7th, 2023, $1.31. So very nice dividend growth here. And again, even though they cut it back in 2020, they quickly reversed course as business began to open and raised the dividend back up, and now are back to where they were, or even beyond where they were before the pandemic. This is the vested interest stock screener. This is how I set up the videos, as well as how I look at a company on a high level. And if it meets 5 of 8 here above, or if it's a financial company like a bank, 6 of 9, then I do more of a deep dive to see if I want to into their balance sheet and their income statement to see if it's something I want to add to my portfolio. You can use this, you can tweak this to suit your needs. Don't just blindly copy my screener. This is what I've set up for my investing needs. Everyone's investing needs are a little different, so take yours into consideration and set your own, what's important to you. Again, you can use this as a guide. Just don't blindly copy it. I'm just some random guy on YouTube, right? I don't have a degree in this. I am not a financial guru. I grew up in a double ride trailer to 2 parents who didn't even graduate high school. I myself did graduate high school and have a degree, but it is not in finance. So don't blindly copy me because I'm on YouTube, right? Create your own stock screener. You can tweak this to suit your needs, but just make sure you understand what you're screening companies for your investing criteria. All right, I'm gonna get off that soapbox. Well, that is it for this one. Always appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this. The Texas Roadhouse one was from a subscriber to the channel, so I do take suggestions. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, if you have a company you'd like me to add to the Stock Pick of the Day series on a day that it pulls back, I will do a video on it. Drop it down below in the comment section and do all that other stuff. It really does help me out. Like the videos, sharing the videos with the people you think that might find value, other dividend growth investors or investors in general. Drop a comment. Let me know what you think. Is Darden in your portfolio? Do you go to any of the restaurants in their chains? And hit that subscribe button. That's the most important one. And hit that notification bell too so you're notified whenever we put out any new content. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. And this being Thursday, I will not have a video out tomorrow on Friday, but Sunday I will have my portfolio update video just like every other week. So tune back in on Sunday morning to see what I added to my portfolio this week, if any options plays hit this week. What's going on? A lot of red today in the market. So the market's still being crazy, doing crazy market things, but these are the times you want to be looking at as many companies as possible, doing as much research as possible, and seeing where the market is presenting value. And don't be afraid to strike just because you're seeing red. Again, it's like walking into the store and then they've got a big red light sale on. You don't run out of the store because they have a sale. No, you buy more at cheaper prices. And that's what you should do in the stock market as well. If you've done your research, you know it's a good company with growing revenue that covers the free cash flow, that covers the dividend, and has good forecasts for their future with a low payout ratio that they cover that dividend and continue to grow it over time as well. All right, we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount in a comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice comes from a certified financial advisor.